Okay. Good morning, or good afternoon, I should say, I think. Although, if you're watching this on catch up, whatever time of day it is, may it be a good one for you. This is your Making Tax Digital for Income Tax. What on earth is it? Presentation. And I'm going to be talking to you about everything that you need to know and everything that you need to do before it sneaks up on you. So, as Benjamin Franklin said, sadly, in this world, nothing is certain except death and taxes. Um, Very apt quote. So, tax generally gets a bit of a bad rap. But ultimately, one of the things I want to talk about today is reframing, in that tax is essentially a gift because you only pay tax when you're actually making money. So, to be able to pay tax and that kind of level, it is a good thing, believe it or not. But do not worry, we are going to be focusing on very much of the practicalities of it. So, first of all, for those of you who don't know me, my name is Davinia and I run an accounting practice called Damn Good Business. My goal is to help more people get comfortable and get clarity around their financial numbers. I'm a qualified registered chartered accountant. I've also got a background of teaching, so I taught for 14-ish years, without giving too much away about how old I am. And I've also had my own business. So I had a business that I set up and had to close down because it didn't work out. And I also currently have a cafe. So when I talk about understanding the challenges of running a small business, I genuinely do, not just from a service perspective, but having to manage stock, having to manage people, and day-to-day cash flow and understanding how difficult that is. So, my goal today is to help put you at ease, give you access to key information, and more importantly, know what you can do going forward to keep yourself informed and keep on top of everything. So, who is this webinar for? Most importantly, if you are a limited company, Making Tax Digital in the format that I'm talking about does not apply to you. This is purely for sole traders or those registered as self-employed from HMRC's perspective. So it's most relevant if you are already self-employed, already registered as self-employed with HMRC. But if you're not yet or just getting started, also going to have some great information in it. Generally, if you were trading in the 24-25 tax year, so you've done a tax return that's about to happen 31st of January for what you've done up to 5th of April 2025, because that's a deciding year, as I will talk about. But again, if you're starting in the current year, so started from April 2025 onwards, this is still going to have some important information for you. The kind of key qualification in terms of when you start to having to do Making Tax Digital is based on your income figures. Now, I will make this clear again at several points. When I talk about income, this is not profit. This is not what's left in your pocket at the end of the day. Income in this perspective is all about your sales figures. So if you had 50,000 or higher in sales in the year to 24-25, then that's going to be very important because tax starts sooner for you, or Making Tax Digital starts sooner for you. But if you were 30,000 or over, or any level, you have options. So it will still be useful. So you can get ahead with all of this. You have access to a recording, so do not feel that you have to remember anything or everything. You can come back and refer to it. And I'll also send you an email out with some top tips in it after the session if you did register with us. So the roadmap for today is we're going to start off with what on earth is Making Tax Digital? What does it mean? Who it applies to, and exactly when it applies to them, what your options are. We're going to talk about what will change from what you may already be familiar with in terms of tax returns and updates, how you can then prepare for what is coming, and again, thinking about timelines and some advice on what to do. And then at the end, we have a Q&A. The Q&A is not going to be recorded, so you can really ask anything that you want to specifically. If you are watching this on catch up, you'll have my contact details so you can reach out with any follow-up questions if you need them. So, first of all, what on earth is Making Tax Digital? Very, very simply, my goal here is to make everything as simple and understandable as I can. Making tax digital is quite, on a very basic level, a change in rhythm. All that is happening is when we report things to HMRC rather than the whole general process of self assessment. Some people are making it out to be a huge change. I genuinely believe for most business owners, it is just about making this change in rhythm. And ultimately, in HMRC's words, it's about making it easier for business owners to get their bills right. So their tax bills, understand what tax you owe and when it's going to have to be paid. So they are modernising generally the tax system. There's been quite a few changes over the last kind of decade, and they're going to continue to happen. They're not doing everything in one go. Now, making tax digital actually already exists, but for VAT. So if you are a VAT registered business, you're already in making tax digital. And in reality, there's not going to be a lot of change from what you do for that anyway. So, who has to think about it and when do they need to think about it? So, starting from the 26-27 tax year, so this is the one beginning in April of this year, officially 6th of April 2026, running through to 5th of April 2027. If you had income or a sales figure of over 50,000 last year, so in the year up to April 2025, as in the return that has just happened or might be about to happen, but the return that's due by the 31st of January 2026, the income, the sales figure that you used for that is what will determine whether you are joining this year from April 26 or at a later date. If your income sales figure was below 50, but above 30, then you'll be joining compulsorily. Is that even a word? You'll be mandatorily, again, I don't even know if that's a word, mandatory in a MTD from 6th of April 2027. But then by 2028, if your income's over 20,000, you will be in it. So most small businesses, self-employed sole traders will be joining by April 2028. You can choose to join early if you don't have to join it. So it's not mandatory for you, but those are ones that have to. Now, the income that they look at is your income from sole trade, so your kind of general business, and or any landlord rental income. So if you have a sole trader business, so if you are a freelance copywriter, for example, or you host events on the beach, then you will take that income. And if you rent out a property as well, it's the total income received that will give you that figure. So if you're not sure, feel free to ask me at the end or get in touch. You should receive a letter from HMRC telling you that you have to be in it if you have qualified, but they can only do that once you have submitted your tax return. So if you haven't yet submitted your 24-25 tax return, one due by 31st of January 2026. HMRC haven't been able to work out if you are in it or not yet. So you want to be keeping an eye on the post, but essentially that is the figure that they'll be using. And as I said, it is income received. So your turnover or the sales figure, not the profit. So total of all income coming in from the businesses that you are doing, that is the figure that is used for it. So, what is it that is going to be changing? As I said, it's very much about a change in rhythm. So, we will now be submitting quarterly updates to HMRC via some MTD compatible software, and I'm going to talk about that in a bit more detail. So, different income streams are reported separately. So, if you had like your main trade and a rental property, for example, those are two trades. Those, although together, count towards your total, would actually be talked about separately, although that is just as it is done now. A slight change in terminology. At the moment, we talk about your tax return, your end of year return, your self-assessment, and that is the one document that gets submitted by the 31st of January. Now they're going to be talking about a finalization. So because we have these 4 updates that happen, there's then this extra finalization that goes through that essentially is everything together, your full tax return. And there is a requirement to be keeping digital records. And again, I'm going to explain exactly what that means and how to do it during this session. But what is it that's actually staying the same? Just to be clear, all the deadlines for actually full submission and payment are the same. So at the moment, your full self-assessment tax return must be submitted by 31st of January following the tax year. So the year to April 2025 is submitted by 31st of January 2026. The year to the 5th of April 2026 will be submitted by 31st of January 2027. So that timeline is not changing. The requirement for payments on account and the fact there is that mid-year payment by the 31st of July, again, that is not changing. So the payment structure, there are no differences to that. You're not having to pay earlier or anything like that. All the same tax rates and unfortunately personal allowances, they are all staying the same. You are still going to be reporting your income and expenses, but you only pay tax on your profits. There is no change there. You still report those trades separately. It's just that at the moment in your tax return, they're kind of on different sections rather than being a little bit clearer with the new format. And you can still use an accountant or a bookkeeper, or you can do it yourself. There is no requirement to use any sort of person to support you or advisor. You are still able to do it yourself, and it's still very possible to do it yourself, but you might need to just think about the tools that you're using to support you. So, making tax digital simplified. What is it you are going to be seeing? What is it you're going to be doing? It boils down to a 3-step process. Now, I will say if you are one of those people who is quite organized and you feel that you do keep on top of your financial records, there probably won't be a lot that is actually going to be changing. If you're currently using accounting software, whatever software that is, again, in reality, not a lot is probably going to change. But if you generally leave things and only kind of look at them towards the year end or starting to do your tax return later on, you're still very paper based in your resources, there might be a little bit more that you'll need to update. But your making tax digital process comes down to 3 main steps. We are going to be updating potentially the way that we record and preserve our records. So recording what has happened in our business. We are going to be thinking about the way that we organize that information and categorize it. And then we will be having to think about how we submit that information to HMRC. And so that's how we're going to be looking at it today, thinking about what's changing with recording, what's changing with organizing, and then what's changing with submission. This is your process at the moment, whether you realize it or not. You've got to write down what's happened in your business. I've made a sale, I've spent some money, I've bought something. You've got to talk about why that money has come in or come out of your business. That's the organizing and categorizing. And then at the very end of the year, you are submitting that information to HMRC. So how does it change with the recording and this movement to digital records? So HMRC have required us now, with this move to making tax digital, to keep what they call digital records. A digital record is all about information that's stored electronically, rather than being written down in a ledger or, just keeping hold of paper receipts. So say in the olden days, when I started as an accountant, yes, computers did exist, but there was still an awful lot of manual ledger keeping. So basically long lists of transactions being written out in the ledgers. They're called ledgers because they were literally the books. We were keeping physical books, transactions, things that had happened. Slowly over time, people moved from writing it on paper to a list on a computer or in a spreadsheet. So that transition has started to happen already. With digital records for HMRC, we are having to record when something happens, what has actually happened, so the money in or out, and a why. So is it that I've made a sale? Is it that I've purchased something, that I've paid my rent, electricity, phone bill, travel expenses? And those three pieces of information together create a digital record. So most of the time, you will have that information easily available. And if you are using any sort of accounting software, you already have that digital record. It requires those items to be entered. If you're not yet using accounting software, if you have a spreadsheet or you look at your bank statement CSVs, for example, downloading those, then typically you've got a lot of that information there. Even on your bank statement, you've got a date, you've got the amount, and you'll have some sort of description. It's just that you might have to look very carefully at the information in that description to know exactly what something is. So we're going to organize it potentially a little bit better, but the base information is there. As well as having the digital record, you still need to keep the supporting evidence. So essentially the receipts, the invoices, and so on to support what's on your bank statement. So these boxes of receipts that you have, you still need those, but they don't have to be physical pieces of paper. You can keep those digitally. Again, if you use accounting software, you can kind of take pictures of stuff and upload it automatically. If you don't use accounting software, there is a really easy hack for this where you're taking pictures and then emailing it to yourself or putting it into a particular drive, so like a Google Drive or a OneDrive, for example. So you've got access to that information rather than keeping it physically, but you must have something to support the transaction. The idea is if you were asked, well, what is that transaction that happened on this date? Prove it was a business expense. You would need to pull out your piece of paper. Your bank statement is not enough. When you then think about HMRC making you create these records, once they are created, they then need to be preserved. Now, HMRC require you to preserve, to keep hold of your data. So we have to keep our records. Generally for 7 years is safest. It can, some people say 6 years. I would say 7 is a good amount of time, which is why, again, keeping it all in paper can feel like there's a lot of boxes of stuff going on. So digital is best. But once you're putting information into, let's say, a spreadsheet, what you have to be very careful of is to maintain what HMRC are calling the digital chain. So once something is entered, you should not be manually editing or moving records within a spreadsheet and kind of copying and pasting things in and out, which, to be honest, is a bit of a nightmare. You are allowed to correct mistakes to things that you've done before, but it does, in all honesty, start to get a little bit complicated about what you can and can't do if you are in the world of spreadsheets. So the easiest thing that you can do is to use accounting software rather than spreadsheets for making tax digital. Now, I know there is a concern when it comes to software that it can be expensive, it's difficult to use. I'm hopefully going to show you some very easy options for this. And this is essentially part 2 of your Making Tax Digital process. So getting organized and using software. So you are 100% allowed to use a spreadsheet to create your digital record and keep hold of your information. So if you do that, you've got to spend a bit of time putting together a spreadsheet and a structure that works and is compliant with what HMRC need. You're going to have to be really careful to preserve those records. So you can't just go back and start overwriting or re-entering items. There's a risk of errors and omissions, or as I said, breaking that kind of digital chain, that digital link. And once you've got it in the spreadsheet, you then still have to get some software to get that spreadsheet to talk to HMRC. So there is something called bridging software. I'll be honest, I really don't like it. It's a bit of a mess. It feels very clunky and awkward. It is so much easier by using accounting software. So, software isn't scary and it isn't expensive. There are a number of free options that I'm going to talk about today. I'm not on commission for any of these, by the way. These are my opinions based on working not only with other small business owners, but having to run my own small businesses and the software that I have been using. So, there are a whole range of different softwares available. They will say on them that they are making tax digital ready or MTD ready. There are some very big brands. I'm going to talk through some specific names. But before we look at that, I want you to be aware of the things that you need to think about when you decide what software to choose or what might be best for you. So if you are VAT registered or not, some software allows you to show VAT separately, others don't. You can always change in the future, so you don't have to worry about what the plan is in kind of 3 or 5 years' time. But based on where you are now, if you are already VAT registered, it will require to use particular types of software, and free ones, unfortunately, you can't use. Are you sending invoices to clients? Do you want to be able to do that directly from your software? Or do you have another way of doing it? Are you just emailing them out to them? If you're creating your invoices in like Word or Excel, for example, then potentially look at whether it would be easier to do stuff through your software and whether you would want to. How many bank accounts do you use? Officially, as a sole trader, as a self-employed individual, you do not have to have a separate business bank account. However, it is the number one first thing that I recommend to all of my clients to make your life easier, both for seeing where you are and just to keep on top of your records. So if you don't already have a bank account, a separate bank account for your business, then definitely recommend it. Again, there are free options. So things like Metal from NatWest is an app-based one. It's completely free, minimal charges. I use that for my own business bank account, find it really easy to use. And there is another benefit of Metal, which I will mention later on as well. Do you have any foreign currency transactions? So do you have any clients overseas? Do you receive any money in euros or dollars? Because again, that will impact the functionality, the features that you need to have in your software. And also, very importantly, what do you find easiest? So I'm going to talk about demos and examples, but it's worth having a look at a couple of different options to see what you find easiest to use. And there is this idea of whether it's an app-based item or something that you use on the computer, or ideally both. So most software now is cloud-based, so you don't have to be on the same computer all the time. You can be anywhere. But some of them have apps that are really easy. Some of them have less functionality. So depending on how you do business, that could be something for you to think about. So there is a whole range of software out there. The biggest ones, and these are the ones that are most well known, which is why I mentioned them here, are FreeAgent, Sage, QuickBooks, and Xero. Personally, I use all of the different types of software because I match which software I use for my clients with what they like rather than what I prefer. If I have to make recommendations, I will say use FreeAgent if you have a Metal account because you get it for free. So you get a full functioning accounting package with all the features that you need, but it comes for free if you have a Metal business bank account. If you don't get it for free, then I would generally recommend Sage. It has a completely free option, and then you can move up the tiers to different levels of paid. Xero is also quite popular if you can get a discount. Currently, lots of stuff going on. Everyone knows MTD's coming in, so do shop around a little bit to look at those. And then there is QuickBooks. QuickBooks is very big in the US. I do use it personally. I don't think it's the easiest one to use for most small businesses. FreeAgent, Sage, Xero are slightly nicer from that perspective. But it really does depend on you. You are the person who's going to be using it and interacting with it. So it's about making sure you are comfortable with it. So just a couple of screenshots just to give you an idea When you look at these are examples from Sage, the packages that they offer. As a self-employed business, you can go for what they generally call the individual option. So there is a 100% free option from Sage. It is free, it is fully MTD compatible. It will be free forever. It has limited functionality, but you absolutely 100% can use it for MTD, not have to worry about any kind of fees for it. And there is lots of support around it. If you want to have a bit more functionality, then you want to be starting to look up the tiers, and that's what's true of most accounting software. So across the three, you can see there's much more that you can do as soon as you start paying. So in terms of having multiple bank accounts, how you input information to it, sending invoices out from the software, and so on. And there are lots of summaries that you can look at. If you're not sure and you know that software is something that you want some help with, drop me an email, get in touch. I'm very happy to help you try and work out. I've got some comparison charts and things that will help you to decide. But ultimately, it's about what's going to work best for you. So, what they tend to do, and this is an example of the simple software from Sage, it's all about firstly recording that information and sorting it out. So they have something that's called a bank feed. So what happens is you set up your business bank account, you set up your software, and then you let them talk to each other. So rather than you having to type things in or look at your statements and then put it onto a spreadsheet, the software will just pull that information in automatically. So you don't have to worry about errors with dates. So it's got the date and it's got the amount. That's two of your key bits of the digital record already. All you then need to do is help the software to know what type of item it is. So what category? Is it sales income? Is it a direct cost of something that you do? Is it rent? Is it insurance? And you just literally click through and say what that information is. Once it's then in, what the great thing is that software will then automatically organize and summarize that information for you. So it will tell you how much you've got in different categories. So how much you're spending on rent, how much you're spending on insurance or cost of sales or on Amazon. And you'll be able to see things like profit, so see how your business is performing. And it will also enable you to prepare a tax estimate. So the big thing with making tax digital is that by looking at your numbers at least quarterly, personally, I recommend monthly anyway, but at least quarterly, you'll get an idea of where you are with your tax. So you won't get any nasty surprises at the end of the day. And all of that happens in the software. You don't have to pay anything. You don't have to hand anything over immediately, but you can kind of be tracking where you are. So if you've got a savings account, for example, for tax, you know how much you want to be putting away each time you go in and have a look. And then through that software, it talks directly to HMRC. All you have to do is click a button and your updates will get submitted. So that final stage of those quarterly updates, it all happens automatically. When you get to the end of the year, and we do that kind of total for everything, the finalization, again, you can do that through the software, and it can also talk you through how to make payments. Software generally are really good at helping you to connect everything, getting you logged in, so it all talks to each other. So all you're doing is going in, reviewing the transactions, confirming you're happy, and then clicking submit. It doesn't do anything without you letting it, but it's all kind of automatically connected, authorized, and is just honestly so much easier. It does require a little bit of work to get set up the first time. I know new software can be a bit scary. Things are in different places, different boxes, and so on. But there are loads of free trials and demos and offers going on. So now is the time to be having a look to see what's going on, to get a free trial, free month, whatever it is. Loads of offers in terms of software as well, if you are paying for it. As I've said, you can get free software if you want to. If you have an accountant or a bookkeeper, you can ask them what they prefer to use. They might be able to get you a discount on the software. Most accountants actually get a better rate for their clients than you would if you went direct. So that's always worth asking. And they can help you get set up for the first time or first time through. Or if you want to do things yourself, you absolutely can. Software does make that easier. It's worth considering whether you want something like a setup session. So some accountants, myself included, offer a session where we basically sit down, make sure everything is set up, categorized, kind of organized how you want it, talk you through it, and then you go off knowing it's all started as it needs to be going forward. And we need that software for the big thing, which are these quarterly updates. So some people are saying you're doing 5 tax returns a year. That I personally think is scaremongering. You're not doing full returns or tax returns each year. You are only having to do little check-ins 4 times across the year. So once a quarter, once every 3 months with HMRC. So these updates happen at 3-month intervals. So you look at your first 3 months, then your first 6, your first 9, and then the 12 months as a whole. The tax year, you may know, is a little bit weird. It's a bit annoying. So it runs from the 6th of April through to the 5th of April. There's a very random story about basically changing the calendar a long time ago, and they didn't want to move out on tax. So they had to shift everything forward, obviously. But it does mean that everything then starts to look a little bit strange. The first quarter officially runs from 6th of April through to 5th of July, 6th of July through to 5th of October, and so on. My number one piece of advice in relation to making tax digital is to not use the standard quarters. You are allowed to elect to use calendar months. So you can make your tax year run from 1st of April through to 31st of March. So everything runs in full months. So you look at April, May, June, July, August, September, October, November, December, and so on. You can choose to start doing that at any time before you start doing Making Tax Digital. So you have to do it before you submit that first quarterly return. But I absolutely recommend that you do, because everything you do business planning will just be so much easier. If you know that you're looking at full months, you're less likely to miss things. If you are not having to start Making Tax Digital immediately, your next tax return, you can run from 1st of April to 31st of March. HMR sees them as being the same thing. So you can do that as well. And genuinely, it makes more sense in your head for most people when you look at it. So first thing, use calendar months. You will need to tick a little box when you do your first update that's what you're doing, and then it will automatically remember it going forward. What is actually happening with these quarterly updates? So you have your different trades, if you have more than one thing going on, reported separately. In your tax return at the moment, they are on different pages or different sections. So it's just noting that the same thing will happen. So you're not going to add together rental income and your self-employed plumber income. They don't go together in one box. They still be shown separately. You are not having to submit everything or transaction data. All that goes in are summary totals. So total income, total expenses. So again, this is where your software will generally give you those numbers, which is a lot easier. The numbers you're submitting are cumulative. So you're always knowing exactly where you actually are in year to date. So although we do them at the end of each quarter, what you want to be thinking about, you're essentially reporting on your first 3 months, then you're reporting on the first 6, so you're adding in the next lot. Then we're looking at 9, then we're looking at 12. What that means is that you're tracking where you are and you are getting kind of an accurate tax picture. So if you do really well one quarter, but the things tail off the next, it's not going to be like, oh, well, you need to give me more money or whatever it is. It's always going to be taking into account that whole picture. You do not have to make any adjustments for things like allowances. So if there's a working at home allowance that you put through, if you've got capital allowances that you deal with, any of those accounting adjustments, you don't worry about. All you are recording are actual cash transactions, money transactions that have happened in the periods that you are looking at. So essentially raw data from your bank or if you've got cash transactions, petty cash, putting those through as well. But you're not making any kind of accounting adjustments that you might see at the year end. And if you have, let's say, a quarter where nothing's going on, so let's say in the first 3 months of the year, you go on holiday and actually there's nothing going on for your business, you still have to submit what's called a nil return. So you can't ignore it. So if you are registered for Making Tax Digital, if you are in this, you would still have to tell them that you don't have any income expenses. You're just essentially submitting zeros in the boxes. So that's just worth keeping in mind. Little graphic, just in case it helps. So this person is very busy. They have two different types of self-employment, some UK property and some foreign property. And this is just to confirm that they would need to be submitted separately to HMRC for Making Tax Digital. It is already done like this in your tax return. So if you look back at previous returns, you have different sections for the different types of income, and you would even have different trades within self-employment. So there isn't actually a change, but it does look slightly different, is the only thing to bear in mind. When are these quarterly updates happening? So it's a month and 2 days after the end of the traditional quarters, but essentially it's the 7th of the month and a bit after. So that first quarter, April, May, June, that you've got to report on, you have until the 7th of August to do that first return, that first update. I do not recommend you wait until the end, particularly when you start out, because technical glitches, all sorts of problems, everyone trying to do it at the same time, things just stop working. But that is your ultimate deadline. I'd always recommend you try and do it basically by the end of July, so the end of the month after. Same, you're going to then do July, August, September. Try and do that by the end of October, but you have until the 7th of November, and it runs all the way through. So your final quarter, that year as a whole, you'd be looking at submitting by the 7th of May. You basically then have all the information you need for your tax return. So you could do your tax return at the same time, but that finalization, that final submission, you still have until the 31st of January to submit. So that doesn't have to happen earlier, even though you could very easily if you wanted to. Okay, I've been talking a lot, lots of dates, deadlines, things going on. So I want to try and give you some practical tips in terms of what you can be doing and what you should be thinking about as you move forward. So your prep timeline, what can you start doing now? Well, if you are not regularly checking in and recording your transactions, you want to start doing that nice and regularly, and ideally in some sort of digital format. Even if that is, as of now, just putting it into a spreadsheet where you have a look at what's going on, that is something that I recommend that you do. But really what you want to start thinking about is testing some software. So schedule in some demos, have a look at some YouTube videos. There's loads of information out there. If you don't know where to start, as I said, if you have a NatWest Metal account, you get Free Agent for free. Just use that. It's great software. It has everything that you need. And importantly, it's free. If you don't know what else to do and you are relatively simple, you're not VAT registered, you've not got lots of different bank accounts going on, and money is a concern, Sage free option is a good place to start. And again, because it's free, just get it, have a look at it, have a go with it, see what happens. And you can kind of practice over the next month using it as accounting software. You don't have to use it to do your returns or anything else this year, but you can just have a bit of a play, see what it's like, see how it works. And then if you do not already have a separate business bank account, please, please, please do that ASAP, because it's going to be much easier to do it when you're thinking about that year ahead. And if you have different trades, so if you have things that you report separately now, or let's say you have a rental property and your self-employment income, set up separate bank accounts for those, because again, it will make your life easier in the long run. Your goal in February is to absolutely confirm what software you are going to be using because you want it set up and ready to go for the 1st of April 2026. Because again, making your tax year change is going to be a lot easier. So make that decision. You have the rest of this month to think about it. So you've got not quite 4 weeks to have a look, have a play, couple of hours. If something feels like it's going to take you lots of time to get your head around, it might not be the right software for you, but you have until the end of January to do that. And then 1st of Feb, you can make sure you know what software you're using. There's also quite a lot of deals, I think, that expire 31st of Jan. So that's worth looking at from a money perspective. Try and get yourself into the habit of monthly updates, monthly check-ins with your numbers. Rather than having a whole pile of things to do each quarter, if you start now doing a monthly check-in, have I got all my income written down? Have I got all my expenses written down? That's all you need to do. Then when it comes to doing those quarterly updates, it's going to be so much easier. There's a weekly bookkeeping checklist and a monthly bookkeeping checklist that I have available. I think they're on my website. You can download for free just to give you an idea of the sorts of things that you can be doing on a regular basis. If you've got accounting software, sit down with a nice cup of tea and you're going to find you're just clicking boxes a lot of the time. So it's nothing too bad. But trying to build those habits before the deadline really will make a difference. Then, April 2026, if you were in that group of people, income over 50K, where it's mandatory for you, then it is go, go, go season. If you're choosing to enter earlier, start of that tax year, that's when you're going to be beginning. So try and plan in your diary monthly updates, so times to sit down and look at your numbers for those first 6 months. Commit to putting that time in the diary. And if you are doing things on a monthly basis, you're probably looking at about half an hour at most, 45 minutes if you're quite a complex business. And if you think it's going to be much more than that, maybe look at doing things fortnightly or even weekly, having that making sure everything is there habit. And then August 2026, that first quarterly return is due. Excuse me. So that is the 7th of August. So if you can, try and get it in by the 31st of July, and then you can sit and chill out for a week, not having to worry about it, knowing that you've done everything that you need to do. You can get professional help. So your choice still, whether you do this on your own or with someone else. And you can choose who supports you and how. So government are allowing you to have essentially multiple agents for making tax digital. So you could have a bookkeeper, maybe who puts the transactions in for you if you've got a lot going on. They could be your supporting agent. Or you could be the one putting it in and then maybe just get an accountant to help you out by reviewing and submitting with you. And they could be your main agent. So you have options there. As I said, you absolutely can do this on your own. So don't feel that you have to, but picking the right software will make your life a lot easier for that. And again, if you have got any advisors in your life at the moment or people that you're talking to, they can talk to you a little bit more about how they can help and what levels that they can help you with. And if you're interested, obviously get in touch with me and I'm also happy to chat about that going forward. So make sure you're keeping your business finances separate for each trade, different bank accounts if you can. Try and start some sort of digital tracking if you can. Explore some software options, get those demos, those trials, check out the YouTube videos, and generally ask questions before it becomes a rush. So reach out. You're going to have my contact details. You can get in touch with follow-up questions as well. Most of us, I can't guarantee every accountant, but most of us here, we want to help you to feel in control of what you're doing and how you're doing it. So if we can help you to feel better about it, whether you come to us for support or not, we know that it will be better for your business life. QR code on the screen is a link to the HMRC government pages on Making Tax Digital. All the latest information will always be on there. There's lots of Q&As and stuff going on. Even HMRC have done some webinars themselves. Some of it does get a bit technical. So as I said, if you get kind of stuck, get in touch with an accountant or someone else who may be able to help. Just to let you know about some of the things that I do offer, I'm not going to talk very long. I have something called the Damn Good Business Club. It's completely free. Basically, if you sign up to my mailing list, you can get access to some resources in there. So, like planners, calculators, checklists, and things that might help. I have a, believe it or not, paper planner that's available on Amazon that supports making tax digital. So if you're still very much a paper fan, you've got a hard copy planner. It's aligned to the tax year, so it runs April through to March. It's got checklists and regular reminders to do your bookkeeping, and the quarterly deadlines are all in there for you already. So feel free to have a look at that. I'm running something called Records Ready as a course. So that will be happening at the beginning of March. And that is basically going to be a supported program where we go through and actually make sure everything is ready, set up, and you're good to go for the 1st of April. And I offer one-to-one support as well. So if you think any of that might be of interest or you've got questions, please do get in touch and let me know. But that is it for the presentation. So I appreciate there is an awful lot of information there. You come back to the recording, rewind, replay, get in touch if you need to. I am going to stop the recording. So if you're listening to the recording, I'm going to say thanks and bye.